generationally passed down instinct. But at the same time, I think um, the asset class we're going to discuss in round three ends up, a lot of people end up making mistakes when evaluating it as an investment, right? Um, Guesses?
So I think, I'd probably put my finger from what you said is real estate.
Bang on. And I think it's high time somebody honestly addressed real estate as an investment strategy, right? So before we move on, right, let's let's take a quick example. I have 25 lakhs today. I want to buy, let's say, a 1 2 bhk with about 70 80 lakhs wherever I can find. And of course, the remaining amount I'll get on loan, 8.5%. Say about 50 lakhs I take on loan, and I'm going to pay an EMI anywhere between 40 to 45,000 on it per month. Does the math make sense? If A, I currently do not own a house and I'm living in a rented house or I'm already paying rent, right? B, I'm buying that property to go live in there, not use it as an investment to further rent it out. And C, to actually buy it as an investment and actually further rent it out.
Perfect. So, it's a great question, and it also talks about my own life's journey.
Mm-hmm.
Okay. And I bought my first house jointly with my then girlfriend and now wife. We bought the house together even before we got married.
Oh,
Okay. And, just about a year before, because we knew we were getting married, we had set the date, and and let me just off record in humor
you
tell
know,
you,
I'll cut it. That's fine.
it's fine.
Yeah.
In humor, tell you, my dad said, "Okay, beta, you want to get married? Great. She's a lovely girl. You should get married to her, but please do one thing." I said, "What, Dad?" And he said, "Go and live on your own, okay, and make sure you have a house before you get married."
Mm.
I said, "But क्यों, Dad?" So his answer was very simple. नहीं तो दो डिवोर्स होंगे, एक तेरा और एक मेरा. so so for marital happiness, you must go and live on your own. Now, I understand value systems in India can be very different in different
Absolutely.
places. I am born, and so was my father, born and brought up in Mumbai. And nuclear family is a very strong value system that exists in the city of Mumbai.
Yes.
But in that humor and serious life's advice, at the ripe age of 24, I went and I bought my first apartment.
Wow.
Okay. And, my answer to the question that you asked me is why did I buy the apartment? Because I think it is extremely important for everyone to have a abode or a home of their own. Okay.
Absolutely.
So the first house is not even a matter of discussion in my thoughts, my principles, and my experience of life, and my experience that I've looked at people around me as investors. Do I need, as a human being and a family unit,
Mm.
a base in which I will be calling my own? The answer is an emphatic yes. You must please go and own your own house. The two questions that then remain pending is, how do you manage the money part
Right.
of buying this house? Second question is, should you be investing in a second and a third and a fourth house?
Mm.
Okay. So let me address the second question, and then we can talk about the first part of it, which is, should you be buying the second, third, fourth house? My experience of real estate has been
Mm-hmm.
that it is an asset class that creates value over very long periods of time.
Right.
Okay. And it is far greater cycles than what you can see in equity markets or gold or anywhere else. So please bear in mind, when you make a real estate purchase for the purpose of investment, okay, you have to have a really long term, even possibly intergenerational mindset to say, hey, I'm living in a house, I've bought another house, I've got two children. This house will, don't look at it as a financial asset that's going to be able to give you great appreciation, but look at it as something that will probably give you 1.5% yield while you're living, and then intergenerational. If I've got two children, both of them can take one apartment and life becomes easy for them.
Yeah.
They're not struggling at 24 like I did in buying your own apartment. Okay. But I think from a pure mathematics in the short term, the cost of real estate,
Yes.
paying stamp duty, brokerage, registration fee, getting the house transferred to your name is
Maintenance.
humongous. No, you've not even got the house
Got
in
the
your
house
name.
yet. Yeah.
So whatever is the value of the property, you easily could add between 8 and 10% in the price, okay, just for these incidental expenses. Then comes, oh, but I need to do this in the house. I need to do the flooring. I need to redo this, redo that. That's the next expense. The third expense then comes the outgoings on a regular basis. And that 1.5% yield that I spoke about, boom,
Gone.
kaboom, is bombed and vanished. Okay. And you only start seeing the benefit of that yield after many, many quarters or years
Yeah.
of actual EMI, I'm sorry, rental receipt. Please remember, on rent, you're going to be paying taxes all over again.
Yes.
Okay. So it's a very inefficient investment in the short term. And when in this case, short term is 10 years,
Right.
15 years is short term. Mind you, it is extremely inefficient. If you're looking at it from a truly 25, 30, 40-year intergenerational kind of, asset, great. I'd say, but again, real estate can be commercial, can be industrial, can be, residential, can be all types. Okay. Please, be very mindful in before. The last point I'll make about real estate, and then we'll come to the other part of real estate, is, the problem with real estate, it takes a very large chunk.
Yes, it does.
Of your entire financial investments. So a person who's finished buying his own home and living in it, then has built a portfolio of financial assets, decides to buy a second investment real estate, actually takes out all investments from every other place only to be able to afford one more real estate.
Correct.
Now, when you look at that person's portfolio, my God, you're hugely overskewed to real estate, and that brings massive imbalance in everything that you do in life.
Yes.
So I think these perspectives need to be kept in mind. Real estate, again, like I started with, is not bad, but is not good for everybody.
Correct.
If the second property is going to be a small percentage of my overall net worth, is not going to make a big dent, and it's going to serve a purpose larger than just financial asset of bringing comfort to
Rental
intergenerational,
income,
then that rental income, which is truly a drip bleed, it is a drip bleed, okay, might still be justified if in a 50 crore portfolio, real estate constitutes maybe 8 or 10% of the entire net worth that I carry. That's the view I carry on that one.
Perfect.
On the question, and another classical mistake that investors make real estate, and I can tell you this, please, again, this is sheer personal experience. I bought my first house in the year 1998. Okay. And since then, life has been great. God has been kind. Wife has been fantastic. And you've been able to upskill your jobs, upskill yourself, improve the job profile, and therefore be able to afford more and be able to give your family unit a better life.
Absolutely.
Perfect. One of the mistakes that I regret the most today is prepayment of my housing loans. Okay.
I'm really glad you brought that out, because that was my follow-up question. What is it? What should investors do in this instance?
So, it is, again, and please understand, if you are in this situation, your situation is exactly what I went through in life, which is the uncertainty of a loan and burden on your head pushes you to save and invest. And every time you get a big chunk of money, you're more likely to pick that money up and dump it to reduce your liability. Great. You are a normal human being, and this is normal human behavior. But then be rest assured, like me, you will remain, not in the HNI category. You will be in the MNI category. Because as long as the cost of financing is lower than the potential of return, every prepayment is a lost ability to
Opportunity.
make truly great wealth. So, for a person who's been
Mm.
invested from 1998 till 2026, and it's only recently that I don't have any EMIs on my head, okay, imagine for the last 28 years, I've probably paid EMIs for 25 years. And in 25 years, I've closed all my loans in intervals of about between 6 and 8 years.
Mm.
Okay, before I've taken another one. Never has been my cost of a housing loan greater than 8.5%. In these 28 years, the market gave a compounding effect of more than 14%.
14%, yes.
This 6% loss, okay, would have meant that I could be retired today, would have meant I could own at least two more additional properties,
Yes.
could have meant I could have owned a lot more gold, or my wife could have been wearing a lot more gold,
Yes,
but it came at a very large price.
it did.
It brought me in those years comfort that, oh, my EMI has come down, oh, my loan liabilities come down, but that comfort came at a massive price in overall net worth at the, as life's journey went on. So uh, it's a big trade-off, and I can tell you, I have regretted trading comfort of lower EMI and outstanding loans to the possibility, I
Mm.
regret it, immensely regret it, to the possibility of compounding over these long periods of
Yeah.
time.
I think 28 years of compounding
My
at
God,
14%, you double your money every 5.5 years.
yes,
Good
absolutely.
markets, 5 years, bad markets, six, 7 years.
7 years.
On a 25, 28 year basis, even with five doubles, six doubles,
You can
you
imagine
can imagine the sort
the
of wealth you
wealth.
would have made.
Only to give yourself the comfort कि अरे आज मेरे पास 5 लाख आ गए, चलो लोन भर देता हूँ, 15 लाख आ गए, भर देता हूँ. Loan तो भर दिया, but
हाथ
I
में
should
कुछ
have
नहीं
been
बचा.
I should have been a multi-crorepati compared to where you are, far more, because of just this
Prepayment.
human behavior. And that's the reason why I say it is all about human behavior.
Yes, yes.
We can keep debating these percentages and all of that, but this costs you a lot more in life than any lost opportunity in equity markets or anywhere else.
Absolutely. And I think very well put, right? Just last week, I was with an investor who had a similar issue, right? They're exactly in that same boat. Uh, Again, he is one step further where they have dependents also, right? But at the same time, we worked out the math, we did everything. I explained to them in detail that why prepaying the loan right now doesn't make sense. But what I also figured out in the conversation is that, like you rightly mentioned, most people are very comfortable with that comfort of a lower EMI. And that holds a lot of power for some reason,
It does.
right? It holds some immense power.
It's
You
unbelievable.
could talk to an investor in the most rational sense. You could put down figures that are correct to possibly a decimal point, but still,
Yeah.
that holds such great power that the investor somewhere starts thinking, okay, whatever this person's saying, is he saying it for his benefit? Because according to me, if I pay off my loan, I have to pay less. अगर मैं 15 साल बाद भरूं तो मुझे इसी 40 लाख के लोन का 70 लाख भरना पड़ेगा.
Yeah, but वो जो 30 लाख बचाओगे आप, वही 30 लाख 3 करोड़ बनेंगे आपके लिए.
Exactly.
So I get it, but again and again I'll repeat that that's the reason why investing is
Mm-hmm.
equally or more importantly a behavioral science rather than a mathematics about every asset class.
Absolutely. Absolutely. That's lovely. And if it was all maths, then I think most of the greatest mathematicians would be the best investors. But it's
Absolutely.
some of the best behavioral coaches who are the best investors today.
True
Lovely.
that.
And I think that brings round three to a close. We now move on to one particular asset that's mainly sold as a bundled product, right? Now, right or wrong, I'm not one to decide, but I'll leave that to you. Again, we're not here, like I said, to bash any product, but at the same time, we need to lay down what actually works and what doesn't. So, any guesses?
When you talk about bundling, the financial world is, most populated with only one bundle, and that's insurance and investments. So I'm
Absolutely.
sure you're heading in that direction.
Absolutely. In fact, the tagline for this round is insurance bhi hai or investment bhi hai. So, but yes. So let's quickly take another example. I have 25 lakhs today. Should I be buying an endowment plan with it as an investment strategy? Simple question. Yes, no. If yes, why? If no, why not?
Perfect. So I think, 25 lakhs is a very large sum of money.
Mm-hmm.
Okay. And so let me first just look at the two asset classes, separately
Yes, please.
in answering this question. First of all, whether you are my age, I'm 52, or you are your age, which is probably
27.
27, both of us, before anything else, and let me say this, I've never worked in the mutual fund industry. Sorry, I've never worked in the insurance industry, only in the mutual fund industry. But I'll say this on camera that both of us, before anything else, need insurance in our life.
100%.
Okay?
No doubt.
सबसे पहले insurance. I have no doubt.
Tagline ही है.
Perfect. And I think it's a beautiful tagline. Kudos to the industry to have coined it. And I truly believe that you need, at every age, you need insurance. And the first thing is, I need to secure my family. That human need cannot change. And the best way to do that is insurance. Okay. Now, at 27 and 52, okay, a 25-year gap means that our need for that security, which can very well be established through a very simple term plan,
Yes.
changes, because the 25 years extra that I've worked, earned, invested, and created wealth allows for me to say, hey, my term plan requirement will now be lesser because I have got this much wealth already created and provided for my family.
Absolutely.
In your case, you still to have kids to grow to get married, educated, and then settle down. Your need is greater. But both of us, the first need is that
Insurance सबसे
insurance
पहले.
se pehle. Then comes to the investment part of it, and more importantly, the bundling.
Mm-hmm.
I think in any life, investment avenues, bundles come at a very large price. Okay. They come at the cost of packaging, they come at the efficiency of the package,
Mm-hmm.
and the outcome of the package. And that's where I drift away from, most insurance plans the minute they try to bundle the two together. Okay. I definitely would love a term plan along with a mutual fund investment, that investment to be created over journey of life, and no better way than an SIP to be doing this. Okay. But would I take a sum of as large as 25 lakh rupees and buy insurance? The answer is yes, but I'll buy term insurance, fulfill my protection need, and take the remaining and start investing through mutual funds. That's my answer.
So I think very well put. Firstly, one point that you mentioned is take care of my protection needs. That is what you're looking at when you're buying an insurance. You're
Absolutely.
not looking at making money when
Money
you're
at all.
buying an insurance. Because if you're going to try to make money while buying an insurance at the same time thinking
Right.
2-in-1 product है क्या ही हो जाएगा कुछ नहीं तो पैसा तो वापस आ ही जाएगा, right? I think that's the mentality that most people approach these plans with, because by the end of it they have a certain guaranteed payout, right?
Absolutely.
And in most cases what happens is once your term is over and you haven't used it up, they'll tell you, okay, you do one thing, you invest in this fund that we have for another 5, 6, 7 years, and then you will get this much value by the end of it.
So my submission is, all of that does not hold any water in conversation, only for the reason that the starting point of buying the bundle, in my view, okay, was a thoroughly, absolutely bad idea. Buy the protection you need, buy larger protection than what you need. No problem with that. Okay. But don't bundle the two. Okay. I think everyone should have a life cover. Everyone should take care of their medical needs, which can really dent your investments.
Yes.
Should you not have medical cover, abundantly cover yourself on these two things. in the largest possible manner with a great company, but pay only for that. I've served. I pay insurance premium for medical cover for my entire family. I pay a very large premium for, now it's becoming lesser, but for a term plan.
Mm.
I religiously pay that from years. I don't expect 1 rupee. My plans are such that I will not get 1 rupee back. I'm delighted. I don't want a rupee back. But should anything happen to me, please make sure
The
my
family
family
is
is
taken
taken
care
care
of.
of. I have diligently paid my insurance premiums. I trust the insurance company will take care of them for what they committed that they will do their part. And that would delight me. I don't want any return of capital. I don't want return on capital. Those are extremely expensive plans to buy. And because they become expensive, your
Mm.
protection level comes
Goes
down to
down.
1/20th, not by 10-20%, 1/20th. So if I can afford a 20 crore cover, okay, by a pure term
Mm.
in an endowment with the same amount of money, I'd just be able to buy a 1 crore
1
cover
crore,
or
yeah.
even lesser. And what I need is protection. So stay focused, buy the protection for the maximum value that you need it, and invest differently, separately. Mutual funds are the best for that.
Very well put. So, like you rightly mentioned, you have to look at the sort of uh, reason as to why you're making a particular investment in the
Choice.
first place.
Absolutely.